This market has been dominated by the bulls and things have just been smashing higher. But there is one stock in particular that is doing the exact opposite. It is getting smashed, crushed, demolished, destroyed. And that stock is the trade desk. And I'm going to tell you why. In this video, it could be a tremendous opportunity if you're patient. All that and more in today's trade desk analysis. Check it out. What's going on, everyone? Jeremy Hritz. Courage pays better than fear trading. And today I'm excited to record this video. This is one I've been talking about for quite some time, putting together, and it's none other than an analysis of the company, the trade desk, ticker symbol TTD. And if you are a trader and you study charts, you know that this thing has been beat up off of earnings, not just once in 2025, but twice. Once in this past August, once in February, and they weren't just little gap downs, they were massive gap downs that resulted in some sketchy positions. And our friends, the Bears, right, have taken ownership of this stock, have just said, this is ours. TTD is ours. And shout out to my Uncle Tom and his virtuoso chainsaw carving skills. He put this together with a chainsaw. Isn't that amazing? So shout out to him. So he carved this bear. Uncle Tom, if you're watching this, I'd love to get a bull because I'm a permabull. But the Bears are dominating TTD. And here's the thing, how long can it last? What are the reasons why? And really it comes down to a partnership that was announced between Amazon and Netflix. Amazon has a new advertising component of their business that people are afraid is going to take market share from the trade desk. And Netflix signed on with Amazon, and people are afraid that that's going to put downward pressure on trade desk. And you saw that after that happened, there was a big move down after the earnings gap down. So there was more pressure and people are saying, well, this is it. This is the beginning of the end of trade desk because Amazon is going to dominate the ad space. But there's lots of positives still about this company, about the trade desk. One of the benefits of the trade desk and their approach is that they use an open internet focus. The trade desk lets advertisers buy ads across thousands of websites, streaming platforms, mobile apps, connected TV. If you think Hulu, ESPN apps, news sites, gaming apps. So it's independent. It doesn't own the ad content or inventory. Instead, it's a software platform giving brands tools to bid on ad inventory in real time. So that's just one of the differences between the trade desk and what Amazon does, because Amazon is a closed ecosystem, or they refer to it as a walled garden, where ads only run inside of Amazon's ecosystem. So they don't have that far reach. But some people are saying because Amazon is so big and they're creating this partnership with Netflix, that that's going to pressure the trade desk. So we'll have to see. But one of the other parts too is just fundamentally from a financials perspective, from a cash flow perspective, from a debt perspective, the trade desk is very, very strong. And when it comes to the fundamentals, we have to look at that. We have to take that into consideration. And really what's going to have to happen is the trade desk is going to have to show that they can absorb this competition, this challenge from Amazon, and show that this is not competition at all. And we are going to respond in X, Y, and Z ways. We are going to maintain our customer retention percentage of 95%. They retain 95% of their customers, which is extremely high. So it shows the quality of this business. But the real date that we want to pay attention to is when they report earnings, which I believe is in November. But let's just dive into the charts, talk about it, and see what is possible here when we look at the trade desk. All right, so you can see right now at the time that I'm recording this, the trade desk is at $46.08, which is quite well off of the lows that it made on Friday when it was down at 43.11. So, and look at this massive move down that we had off of their August earnings. So it traded at a high that day of 91.31. And you can see this huge gap that followed. So let's just measure this gap out from this lower wick to the upper wick of this candle. And you could see that that's a $30.51 move. That is huge. That is 34.89% of the value of the trade desk dropped off of earnings. So that was significant. You want to talk about squeezing the bulls. There you go. And then you can see from there, it really chopped sideways, dropped a little bit down to the 50.21 mark, popped back up again, continued to move sideways. You got this decent little pop here up to 55.56, and then it slowly trickled down. And then that Netflix Amazon partnership news came out, and boom, it got smashed. And then it got a downgrade, and then it got another downgrade, and it just kept dropping. And then we saw here on Friday, this past Friday, you did have a pretty large order come in, and it was for over, I want to say it was over 1 million shares that were purchased. And potentially that could indicate the bottom, right? We see this large uptick in volume here. We were oversold. If we're looking at the RSI, we saw that start to bounce up. And if we just draw a trend line here, we could see that we are starting to, even though we are oversold, that is starting to climb a little bit. So we want to keep an eye on this. We're seeing the RSI start to show some momentum turning up. And today is actually turning out to show some positivity for the trade desk. Again, we still have some time before the market closes, but it is up 3.67% today. But there's still quite a work for this one to do. And in fact, you can see we have this pretty large volume node overhead here at 46, and this is where it's been getting rejected here recently. But notice above that, if it can get into the 47 area, it's thin volume up to $51. So a short-term move, we can see up to 51, but I don't think the low is in yet. I think we could come down perhaps a little bit lower. We almost touched the April 7th low with the tariff impact, Liberation Day. And if we were to fall from here, and I think we can. I think you're probably going to see more downgrades, more negativity surrounding this company. We haven't seen full capitulation yet, but we could see a dip down to 40 and potentially even $38, even down to $36. So I'm watching for a drop lower. Now, to be completely candid, I have picked up a position in the trade desk. I filled about 50% of my order, but I have the other half waiting in the event that it drops lower. Now, if it runs from here, I'll sit with my shares and ride it out. But again, I do think there is some more weakness for this thing to come lower. So that's why I'm going to wait before I have an extremely large position. So I have a modest position in this company that I accumulated as it started coming down, and now we're playing the waiting game. But like I said, I do think that there is a chance that this could come down lower. And what I would like to see, again, we saw it get oversold here off of the August earnings. We saw it get oversold here off of the Amazon Netflix partnership. Let's see it come down one more time and just poke its head through into that oversold territory and not come as low as it did before and then start to turn up. And I think at that point, that's where I'm going to add that 50% of the other position and then just sit tight for 6 to 8 to 12 months. I'm going to be very, very patient with this stock because it's similar to the concept of catching a falling knife. And one stock chart that I want to reference here, UNH had something similar. You can see this huge move down that it had, two big gap downs. And when it fell down into the 247 range, you did have buyers come in and push this back up. I wasn't willing to buy UNH here because I thought that there was one more drop. And this thing chopped sideways, try to push up into the 50, didn't, and then just kind of bled lower. And then here, this is where originally I was going to try to get in at 188, but I felt that this was a good opportunity when this dropped again. We got oversold on the RSI, and you can see how even though it got oversold, it wasn't as significant as it was before, and that's where I took this long. So I'm looking for a similar type of thing to occur here on the trade desk, but again, I do think there's a little bit more weakness to come, right? So again, just going back to look, where has this stock been? Well, its all-time highs up here in the 140 range, And notice that it hit 140 in December of last year before it chopped around. And then it had that huge gap down off of earnings on February 12th. Let's measure this one out to see how far it dropped from its close to its low there. So $40. So it had a $40 gap down in February and a $30 gap down in August. So this thing is no stranger to just getting smoked and smashed off of earnings. And you can see what came from there: a slow bleed down, a little push up, another slow bleed down, and where it bottomed there on Liberation Day. But then notice coming out of that on its May earnings, what did it do? It gapped up. Now, this wasn't as significant as a gap up as the gap downs were, but you could see this thing moved up $11.18 off of those May earnings. It was hindered and held back here by the 100-day simple moving average, touched the 50, and then it pushed higher, hit into the 200, and that's where it got rejected, and that's where we are now. So, how long is it going to take for this company to recover? How long will it take for it to get back up to $60, $70, to $140? We don't know, but this is one you're going to have to be patient with. Again, the whole concept of catching a falling knife, there's no true enthusiasm behind this company just yet. And we have to wait to see if we get it, because it's just not there. And so that's why I think there is some more weakness to watch. And that's why I want to see if it could come down into that $38, $37 range and then begin buying up that second half of my position. Now, I have marked out here the COVID low of 2020, which was $13.57. I don't believe it could get down there. That would be a massive, massive drop. You could see that low here. At that point, it may be worth just cutting the position, but because that's quite a significant drop and things would have to be really, really bad. But you could see where we currently are, there is quite a bit of support here. And if you're just going back and looking in time from 2022, so that's the bear market of 2022, into January and February of 2023, we have found support at this area before. And if we go to September of 2020, after Trade Desk went on this run, it pulled back into this area before it blasted off. So we have had 1, 2, 3, 4, and now the 5th time testing this support. So it gives us some confidence that this thing can push higher out of here. So in the interim, what levels should we be watching for a bounce? Where can this thing go? Well, again, let's zoom in a little bit. And again, what I'm watching here first is for that $50 mark. Let's see if we can get into the 50 up to 51. Again, we're going to encounter this volume node here. And probably what we'll see is a little bit of consolidation and chop in this area. So something probably like this we're going to see moving sideways here and then slowly creep out of there. And then the next target that we'd be looking for would be 61. And if it could break through 61, it does have a clean shot up into $70, which is lining up with the 100 simple moving average in that 50. So that's what we're looking for. 51 for a short-term target. And that's really just to confirm there's a rebound coming in, that this thing's going to start recovering. Then from there, we're looking for 60 to 61. And then from there, we're looking for $70. What would happen from then is probably a little bit of a retracement, a little bit of consolidation, some sideways movement. We might see it dip back down into 65. And then from there, we could see it start to push up and maybe reclaim those $80, $90 areas, and possibly even push up into $100. But in order for it to get there, it's got a lot of work to do. And like I said, I have a 6 to 8 to 12 month time frame on this to get back up to those levels of $80+. Do I think that it can get back into the $100 range? Absolutely. But you're going to have to be patient with it. I know that I'm going to be. And so I'll be doing things along the way, selling calls against my position, buying protected puts. And for that second half of the position that I want to purchase, I'm going to be selling puts on down days to capture the premium. So I'm just profiting off of this position across the board. So that is how I am going to be approaching the trade desk, which I do believe presents a significant opportunity here in this super bullish market. It's at a premium, or excuse me, it's at a discount. And I think that there is some upside here that we can take advantage of. So there you have it, my take on the trade desk. Again, I have a position in this company. I'm waiting to buy the other half of it because I do think that it's going to come lower before we get a meaningful push out of here. If we just continue to push out of here and hit new recent highs and eventually get back up into the 80s, 90s, and 100s, then so be it. I won't add to the position. But again, I do think there is more short-term weakness to come before we get true capitulation from the bulls and they step back in and drive this thing up. What are your thoughts? What's going to happen with the trade desk? Is this thing going to continue down? Is it going to break those COVID lows? Is it a company that just can't compete with Amazon? Is it over? Let me know down in the comments. And for the bulls out there, what price target are you seeing on the trade desk over the next 6 to 12 months? Let me know in the comments. And while you're at it, smash that subscribe button and I will see you back here for the next video. Make it a great day and honor the moment. Take care, everyone.